Hey everybody, this is the day trading options weekly review for mid-August. This is a little bit different than what we normally do, but we're in a really different situation. For the past week or so, all we've heard about is the Chinese market is crashing, the sky is falling, and of course it is. And what we're showing right now is Amazon, and it's Monday is the little green one on the bottom right, and if you go up, and you see a little red one, that's Friday. So over the weekend, the thing dropped like $45, $35, right? So in option trading terms, that's a fortune. In fact, we have a student and an option trader who broke all the rules and made $45,000 because he bought right at the end of the day on Friday a put, and he held on. Now, if you look back, you can see, this is obviously going down. Is it obviously going down and crashing? No. But what he did is he said, this thing's been going down for a while, and I just, and they're screaming about the stock market crashing and everything else. And as one of my people that I listen to says things like, think like the traders. What are the traders thinking? And he says, well, I think that they're going to be wanting to get out, which means this thing could drop a lot over the weekend. And he took a risk. You could even say a gamble, and it paid off big time for him. But he was kind of in the game, and he was seeing the way that it was going. Of course, as soon as this huge gap got filled, in other words, it bounced back up. That was a very green day after the drop. But we just wanted to kind of show you this because this is a unique situation. And so, Stephen, you have anything else you want to add to this? We'll show us a couple of the other stocks as well that we looked at. This is SPY. This is Tesla. Baidu. Big drop, big comeback, which is normally what happens with a gap.
Exactly. Yeah, and this is Scott and I were talking about this before, and it kind of gets my blood boiling to know that people can kind of do this to the market. Some people have the ability to trade after hours, and you can't do anything about it. In fact, if you're in up here and everyone knows what you should do, and everyone's telling you to hold on to your money, it's going to come back, blah, blah, blah. They don't care. They're just worried about themselves. And what happens is they go ahead and make their move when your hands are tied behind your back, and you get a massive gap down. Now, this is a big green candle because it's such a big gap. However, it doesn't really matter to you because this is what? Let's see. In some cases, like on Baidu, it's $50. $50
off your stocks.
That's 25% of what your freaking whole portfolio is on one of your stocks there. And then, like I said, go back down to the SPY or the Dow, and we're looking at the entire market going down. So chances are all of your other stocks are not performing too well at the moment.
Right.
So, what we have is a very clear case of somebody who kind of understood a little bit more about the stock side of things and the stock sentiment or trader sentiment. This is very clearly in no way a Cornerstone trade because you're holding overnight. You're kind of predicting what you think is going to happen.
You're kind of holding over 2 nights, really. 3, Friday night, Saturday night, and Sunday night. It's like, you'd be pretty anxious.
Exactly. And you know what? He was on the right side this time, and congratulations. But just imagine, in terms of risk, it's definitely going to be very dependent on your personality and your knowledge base. So it worked out really well for this guy, and that's really awesome that he made that kind of profit. But keep that in mind. It is definitely not a Cornerstone trade. So what you're looking at here, let's go up to one of the, Scott, I believe you said 4 or 5 stocks. Baidu,
yeah,
Tesla,
Amazon, Google. Every single one of these stocks looks like they dropped way more than, let's see, about 10%. Yeah, so amazing opportunity if you were there to catch it, and looks like you did a great job getting out. And what we can talk about real quick is how he positioned himself to sell. So here's Friday. This box represents Friday, and I believe he bought kind of towards the end of the day on Friday. Last 15 minutes.
Even better. So in the last candle here, so he had this prediction and he made his prediction, and he set his automatic sell orders. So what happens is, as you can see, this gap began to fill very quickly in the first 15 minutes of the day.
Actually, the first couple minutes, it was going up like crazy.
Exactly. So what you have to, there's no way that your little fingers can be fast enough to sell and adjust the, whatever sell point that you can when something is moving that fast. The only way to really do it and be successful at it is to have automatic sell orders ready to go. So when the market opens up, everybody who could not play during the after hours, their orders are being filled. So you have this time, the first 6 minutes, where the market kind of settles with this kind of stuff. And he had his automatic sell orders in place, and they were instantly filled because the gap was so great, and his price was a good price that a lot of people wanted, given the entire market dropped by a huge percent.
So, Stephen, could you have set like a market price to sell?
Absolutely. You would definitely give up some of your profit because, well, maybe not in this case, but
because one of the things he said is he had a real problem deciding on what the price was that he wanted to set, and it went off. They were filled so fast that he's sure he made $45,000. I mean, who cares if you would have made $46,000? But I was thinking about it. He was setting the price. I'm just wondering if you'd set the market price, would it have given a better price than a guesstimate of what he should set it at?
Absolutely, but here's the risk with that, and it's one of those things where it's like when you win, you really win, and if you lose, say goodbye to just about all of your money. And the reason why that is because market takes the first available order. So in this case, had he put in a market order, it would have sold in the first couple seconds at the very best price of the day before that green candle began to fill. Now, because he had a limit price, had it gone against him, he would have had the option to just stay in a little bit longer, and it wouldn't have instantly sold it for a loss. So in this case, it would have benefited him a little bit more. Maybe he would have made $55,000, but you can't really count. You can't really think like that when you're dealing with large numbers of this nature.
Right.
So yeah, it would have helped him in this case, but it's definitely not something. It's not something that I would do, just because if in the event that it does go against you and you have a market order, it will sell it no matter what.
Right. Yeah. So yeah, it's kind of cool. Well, this is a case of we see, singular gaps. This is a case where pretty much the whole market gapped down, which was pretty extraordinary.
Yeah, absolutely. This is a record breaking in every death.
Right. And the point of this all being, first of all, it's possible to make a small fortune in the market. And secondly, if you're not in the game and playing the game and learning the rules, you don't have the opportunity. You'll never know what to do. I mean, even if you didn't do the gap, on Monday, that's a huge move back up for, in this case, Google, right? I mean, so, and not all of it happened in the first, 30 seconds of the market opening. That's the day. So when you look at it, there are days where there's really good moves. It would have been hard for you to have bought anything on any call on Monday and not made money. And that's kind of a nice feeling. They don't happen every day, but they do happen. And if you're playing the game, you get in. And I think you need to think of it as a game. Yeah, it's your money, and yeah, it could be, hopefully it's money that you don't care if you lose or not. I mean, we always care if we lose, but you don't want it to be your mortgage or your retirement fund that you're playing around with. This is very volatile, but you just have a great opportunity, and it happens when you're in there and when you're playing. And I think the other thing that we talked about, you sort of mentioned a little bit about it, Stephen, is, and you were angry, was This is total market manipulation. So that's the other side of it, right? Is like the market is totally manipulated. It doesn't just decide, oh, I'm going to drop, you know, $60 off of Google on Saturday, and then it happens. I mean, someone's thinking about this and manipulating the market. So, but if you know that that's happening, you factor that in. If you're naive and you just think, oh, this is free market and it just settles, you know, la-di-da, some fairy tale. Like, no, there are market makers. There are people with computers. There are hedge funds with billions of dollars. They pour it in, they pull it out. And, you know, just sort of depending on like whatever the reason is, I don't know. Some guy was mad at some other guy and decided, well, I'll show him, and move the market $50 or $100. Just what happens, right?
Absolutely. And, you know, definitely this is a great opportunity to highlight the value of process and having the skill, because let's look back at these other days. Let's say Monday, Tuesday, Wednesday, Thursday. Oh, shoot, that's not even Monday. There's Monday, the 17th. Each one of these days provides numerous opportunities for you to make 10% in 10 minutes or less. So on these days that look like they're kind of not really going anywhere, you're making 10% maybe multiple times a day. And on these huge days, you're making maybe 25, 50, 60, you know, maybe even 100% on your money, utilizing the same strategy. So I highly, highly recommend that unless you're like this specific guy who did this, who has decades of experience of trading, don't go ahead and start predicting what the market's going to do. Build up the skill. It doesn't take a whole lot of work. It does take, you know, some determination and discipline. But once you get the skill, you'll be able to provide for yourself and your family on days like these, the normal days, which are the average, most of the time days.
That's
and
right.
You won't be relying upon this.
Yeah, so what I want to say too is the previous 10 days he was making 10% or thereabouts, you know, each day on his trades following our system, and it just happened that, you know, after doing it for a few months in the options and following our system for a few months, he just looked at this day and he just said, you know, I think it's going to drop more, and probably over the weekend. And he, you know, gambled a little bit, took a strong risk, took a big risk, and it paid off for him, you know. And like you say, if he was trying to do this all the time and nothing else, he would, you know, win this time, lose the next time. So it's that consistent effort that wins. You know, it's basically the tortoise and the hare. The consistent effort wins the race. But if you're playing the game on Thursday and Friday, those were nice red days, and you would have had a good opportunity to make more. And,
awesome. Yeah. What an amazing profit.
That's right. So congratulations, David. Happy you had that success. And
when are we going out?
That's right. Taking us all to Hawaii.
Yeah.
So thanks for joining us, everybody. This was kind of a special presentation where we were in somewhat of an unusual week, and we just wanted to kind of discuss it in a little bit different way than we normally do. And plus, we also wanted to share and congratulate David on his success. So thanks for joining us. Make sure you subscribe, bottom right-hand corner. If you want to know more about the system, how the Cornerstone system works, how the Waves of Profit software works, check the description. We've got links there for you. And we'll see you next time. Happy trading.